Hello, everybody. I'm Angèle from the Village Family Services. Today we're talking with Debbie Deering. Hi, Debbie. How are you?
Hey, how are you? I'm
Good.
great, thanks. Thanks for
Uh,
having me.
Thanks for being here. So Debbie is the Financial Security Advisor and Managing Senior Partner at Relevant Life Financial Group.
Mhm.
So Debbie, could you give us a bit of details on how we can contact you and where you're located?
Sure. We're located in North Bay, Ontario. I've been with London Life for well over 25 years now, and I was the manager of the branch for 20 of those years, and then retired and started my own firm called Relevant Life Financial Group. And what we do is we work with our clients on the full financial planning spectrum. So from life insurance to investments, to full financial planning, and all the products that go along with that. So we work with clients in North Bay, and I have an office in Sault Ste. Marie as well. So you can reach us at 705-995-2910, and my extension is 4248.
Perfect. So Debbie, can you explain to us what is an RDSP?
Well, an RDSP it was established by Revenue Canada, really, to help people with disabled children or adult disabled people because they're really limited in the way that they could save money. So an RDSP is something that is an investment, and it will allow you to invest money into that as the holder to a beneficiary, which would be the disabled person. And the government then will give you grants and bonds that will also top up the funds inside of it and grow tax-free. So you don't get a contribution like an RSP. You don't get a contribution break on your taxes, but all the growth inside of it is tax-free.
Okay. And what is it again? It's registered disability.
Yes, I'm sorry. It's a registered disability savings plan. So
Okay.
in our world, everything is done by acronyms, right? So
Yes.
RDSP, so a
Yeah.
registered disability savings plan.
Savings plan. Okay. What are the administrative or management fees on an RDSP?
Well, the fees are dependent on what you're investing in. There are no fees in specific to hold this type of account. There are no fees to trade with inside of it if you are doing investment, some changes within the account. But if you invest in mutual funds within this fund or in segregated funds, which are like a mutual fund but exclusive to an insurance insurance agency, sorry, that if they have what they call management expense ratios. So that's called an MER. And so what that means is that if you put in $1 and that dollar earns 10 cents, well, that's your earnings. But the fund itself may have earned 12 cents. So they usually about 2.5% is what they call an embedded fee with a mutual fund. If you invest in GICs within your RDSP, then that's just straight principal plus interest, and there would be no fees attached to that type of investment inside of it.
Okay. How much does it cost to move your RDSP to another financial institution?
Well, it can be to another, okay, so just to clarify that, when you say move your RDSP from Mackenzie to Royal Bank, you mean?
Yeah.
Or do you mean, okay, so if you keep it within RDSP to RDSP, so moving it from just institutions, then there could be a fee, a transfer fee. Ours, we do not charge a transfer fee to do that, but some other banks may. So it could be up to $50 or up to $150
Okay,
to change institution. Mhm.
that's good to know. What is the process for receiving contributions?
Well, you can contribute for a lifetime up to $200,000 into an RDSP. That's the maximum that can go into an RDSP. And again, it's not tax deductible at source, but it grows tax free. So most people, and you can make contributions up until the age of 59 into the plan.
Okay.
Most people though do it month to month or annually. They put contributions in, and you can certainly do that. And with every contribution that you make, then dependent on your annual income or your family household income, that would then depend on whether or not you get the grant or the amount of grants that are available from the government.
Okay.
Which can be really significant.
Yeah, it can be. I saw that for my little essays.
Yeah.
So what are the rules around who manages the RDSP?
Well, the holder manages the RDSP. So the person who opens the account owns the account and would manage it with their financial advisor. So you would work with your financial advisor to help you with, the strategy of what to invest in and the time horizon and the risk tolerance that you want to take within that fund or in that fund mix. So that's very important. But when you think about who runs it, the disabled person does not run it. It then is only the holder.
Okay. Okay. What choices do you have to invest your RDSP?
You can invest it in mutual funds. You can invest it in GICs. You can keep it in cash if you want. But most people invest it in mutual funds because it opens you up to the markets, and you get a better of return than just straight interest, right? Yeah. So most people do it within the mutual fund world.
Okay. What type?
You make it. Then you.
Oh, sorry. Go ahead.
Go ahead. No, that's okay.
Okay. What types of payments would the financial institution allow out of an RDSP?
Out of?
Yeah.
So how it works, I'm going to go back a little bit because let's talk about how the principal, which is the money that you would put out of your pocket or the holder would put out of their pocket, and then dependent on the family income. So family income up to $91,831, you would get 300% times 500, so that's $1,500 for the first $500 that you put in. Then you would get 200% on the next $1,000 that you put in. So let's say you put in $1,500. The grant will be $3,500.
Nice.
And depending on, so like you're really tripling your money by putting your money into an RDSP. Mm-hmm. And what that does is that and all of that grows tax-free. So that's why I wanted to break it down like that, because there is the contribution part of it, and then there is the grant part of it. Okay. And then if you qualify, there's another bond that you can get inside of that depending on your income. So if your income is below, I believe, 41,000, then you would qualify for the bond portion of it as well. So that may be an extra $500 or whatever the contribution room. But the beautiful part about this is that if you started contributing today, mm-hmm. and your child had been disabled for a long period of time, they will backdate all of that grant money. So your first deposit of, let's say, $2,000 or $3,000 could bring in $8,000 if you did the calculations properly, because they'll catch you up on the grant money that you missed in the former years. That's
Nice.
very important.
Yeah, it is. Wow.
Yeah. So for you know, over the last 5 years, your contribution room could be $10,000 that you've put in. The grant money would be $15,000 in a catch-up.
Wow.
So your 10,000 automatically becomes 25,000. That's
Wow.
just a great example of that.
It is very.
Yeah.
So last question, Deb, why should we open an RDSP with Relevant Life Financial Group?
Well, it would be great if you came and had a chat with me. Basically, the process that I like to take clients through is to sit down and talk to them about their needs and about what is important for them and what their goals are. So it's not about selling a product. It's not about, selling a widget to somebody. It's really about finding out what you and your family needs over the long term or short term to help you in your saving strategies. When you look at an RDSP, it is a very specific product. It's designed specifically for the disabled. And it's important to know because, when you access the RDSP for income later on, so the disabled person now needs an income from that. There's a couple different rules that you have to think about. One is a 10-year rule. So if you were to take the money out or have an income from it within the 10 years, you could lose that grant money. So, there's time that has to be involved in that. So working with somebody like myself or any financial advisor, we help you to navigate the time horizon that you really need to be able to invest into an RDSP. You also have to think about the opportunity that when you take the money out as income, it's not going to disturb any other income that disabled person is receiving. So if they're still getting income from the government, from a disability tax credit, or if they're getting old age security or CPP, they'll still be able to get the money from the RDSP, and it doesn't affect any of what they're currently getting. So this is very important to know, because a lot of people are worried about that. Well, if I say, my child can't have so much in savings because they'll lose their tax credit. Yeah. An RDSP protects all of that from them. So that's really important.
Wow, that's good.
And so so when you work with a financial advisor, we can help you with some of that knowledge that you need to make the decision on what to put into and how much to put into an RDSP for your child. So that's huge. The next thing that you want to consider is when you work with somebody like myself, our team at Relevant Life are all well educated and licensed to be able to help you with these types of decisions. And we can also introduce specialists that can also help you in caring for your child. So one of the things is you may need a lawyer to help you with developing a Hansen trust. You may need some accounting advice because, it's best if you leave your RSP to the RDSP in the amount of estate planning. So those types of things are all required, and we have the knowledge for that. So we can help you with all of your questions, and we can also help refer you to other specialists that will help you with some of the decision making that you have.
Okay. Wow, this is really good. Really good information, a lot of good stuff to take in. I want to thank you, Debbie, for providing clarity towards RDSPs and for being with me.
hope that people found it interesting. Sorry for the background noise if there was any. We have some construction people here, but I'm very, very happy to help you, Angel. Thank you very much for inviting me to talk to you about this, and I'm here to help wherever you need it. So if your listeners need help, please reach out to Angel and she can guide you to the right financial advisor for you to help you with some of these decision makings. But if you do have a disabled child or a disabled adult in your life, this is something that's absolutely probably the best thing Revenue Canada did for people with disabilities, is give them this opportunity to save. So I hope it helps a lot of people out there.
Perfect.
Thank you.
Thank you.